Welcome back, everyone, to Vox Markets. My name is Paul Hill, and by popular demand, I'm delighted again to be able to speak to CEO Ian Strafford-Taylor and CFO Richard Cooper of EQLS Group, a leading international e-payments and fintech platform. So welcome, gents.
Hi, Paul.
Hello.
Well, big congrats on today's record results and upgraded outlook. And so maybe we can start there, Ian. What's been sort of driving the terrific 39% year-to-date top-line growth, particularly in comparison to a flattish GDP in the UK? And it's roughly around about 39% is roughly sort of like three times what the e-payments market has been growing at worldwide. So what's the sort of magic sauce?
Well, funny enough, I was going to mention that the macro environment is a bit tough. I think you're seeing that from announcements from quite a lot of other companies. So against that background, how are we doing so well? It's because we're winning new business all the time, and we're expanding. Fine, these results are great, but when you look out with the acquisition in Belgium, the fact that now we can service customers, everything's off the same API, so we can start to API connect, we can do more white labels. Our addressable market is growing as we look into the future as well. It boils down to winning new business, and typically the larger end of new business. Whilst these businesses take a longer to onboard, typically, especially their API links, takes time, right? They're immensely sticky and scalable, and so really that's what's driving it.
Yeah, and on that sort of top line, with the large enterprises, I mean, these guys are sort of like, serious industry hitters. And I mean, and presumably, in terms of the actual product and the services and the technology stack, a lot of investors can take some reassurance that these guys don't make their decisions that lightly and would only transfer to best in class sort of like software and technology.
Yeah, I mean, I would hope so. The proof of the pudding. I mean, we don't go out naming names of we do this for this or this for this. And in fact, in many cases, they may not be household names because they're platforms themselves. But yeah, I think we can take reassurance from the feedback we get from companies of that size, and how easily we can integrate with them and how well things work. So yes.
And what's the pipeline like then for sort of like, you mentioned it's presumably it's a good, healthy pipeline for new businesses, for new, large companies going forward as well?
Yes, it is. We have a healthy pipeline. And of course, the only downside when you start going after bigger and bigger customers is typically there can be RFP processes. It can take a while. You might get your hopes up. You might be disappointed. It can be a bit jagged in terms of rather than a straight line. But as we look forward, we can do so with confidence.
Good. Okay, then Richard, in terms of the sort of like the secret sort of like formula behind the increasing margins, because I would have naturally thought as you go to bigger customers and you have to go to sort of like greater volumes, the margins would go down. But you guys, the finance team, have increased your gross margins, which have accelerated your EBITDA margins as well. What's been behind that? Because that really is sort of like talking the talk and walking the walk.
Well, we've been very careful to suggest to people who follow us that we do expect an increase in margins. We've repeated that message for the last 18 months or so, and it's come to fruit. So that's really a combination of the change in business mix and the change in affiliate mix as well. So to flatter Ian for a moment, which I don't normally do, but he's been very good at renegotiating some of the affiliate deals. So and on some of the big customers, that makes a huge difference. So that's all in the right direction. We do expect it to creep up even further, but perhaps not by a full percentage point.
Okay, so that's the gross margin, but you presumably, with regards to the you largely fixed cost base, etc. I mean, I know you're going to be putting new headcount in and investing further in the compliance and all the sort of R&D and all this sort of stuff. But you presumably, if you add or you maintain your 52% your gross margin and even possibly uptick it, then you're going to see increasing margins at the EBITDA level, I presume.
Well, I think we need to look at this in two sort of columns, really. There's the sort of core business or the business pre-Unex, where we've got to a period of stability, but we're always increasing headcount for compliance and salespeople. But as we put in our RNS, with a combination of staff commissions and similar, about 25% now of our total staff cost is variable pay. So that's really moved the dial. We've been able to move away from having very defensive pay rises to getting an ability to pay people bonuses and performance pay, which so obviously links that with revenue and de-risks it for people. And secondly, the second column being UNEX. So, we've got really no costs in UNEX for the first 6 months of the year. We completed on the 4th of July. We have got costs coming through the second half. We are remediating the business as we advertised at the time, done a fantastic amount of very talented recruitment. We look forward to giving everybody an update, close to the year end in relation to how that's going and what we're seeing.
Brilliant. And then Ian, just in terms of sort of like the culture of the business, I mean, obviously, you've got sort of like quite a very highly incentivized workforce there. How is that sort of like translating? Is there a lot, I mean, presumably, the culture is very positive at the moment.
Well, I'd like to think it is, wouldn't I? I mean, maybe, I could be deluded, but no, in all seriousness, the vast majority of people that work here are shareholders through the SIP scheme that we've done for the last couple of years. We keep them informed every 2 weeks. We do an all hands where I update everybody and we get kind of highlights of what's going on. We try and do social gatherings like company-wide twice a year, because ultimately, our main asset, let's be honest, is our people. They build the stuff, they sell the stuff. Rich and I may be the two people that investors see most of the time, but really our strength is our people. The culture is very, very inclusive, positive. We've had, unfortunately, a couple of people who, got seriously ill. We look after them. It's that type of vibe. We try and keep that familial feel. For anyone that comes in the office, you can you can sense it. It's hard to put into words and be specific about, but there's very much a kind of shared unity of purpose. It's not always been the case I won't disclose how many years I've been at work, but plenty. You don't always get periods like that. I enjoy coming to work. I enjoy interacting with my colleagues. It's a good environment to work. And,
well, the esprit de corps sort of culture there is certainly working its treat. There's no doubt about it. Let's just turn to a real sort of like potential needle mover for next year. Is the sort of the UNEX acquisition and the
By the way, we can't call it UNEX anymore. It's not called that.
Oh, sorry.
Equals Money Europe.
Money Europe, sorry. The Money Europe and the expansion of that across the EU. Can you just talk through the sort of the plan, what sort of key milestones, the timeline, and also the sort of the size of the addressable market? Because obviously most of it's through servicing UK customers at the moment, the business, but it's still growing.
I mean, if you think about it, what we bought when we bought what was UNEX is now Equals Money Europe, is a company that had all the licenses that we would ever want in continental Europe. And as you know, regulated by National Bank of Belgium, or NBB. And it had a very smallish merchant acquiring business, which we didn't have that capability. So what we could do on the day that we got the keys, we got the keys on the day that essentially the NBB said they had no objection to us taking control, was that we could start to hire people and somewhat grow that merchant acquiring business. And it's actually doing well and ahead of where we thought it would be at this time. However, the real prize and the reason for doing this transaction in the first place was to have the whole multi-currency IBAN and Equals Money / Equals Solutions platform available across continental Europe. Now, that takes a little bit more time because we have to get the banks they have, plus other banks, to spin up the EU-based IBANs, have it all connected into our platform here. Just lots of technical integration work, which we always knew would take a few months. So I would say by the end of the year, we'll be in a position where we can start to shove more volume through that sort of solutions, the sequel, if you want to think of it that way, EU or BE denominated IBANs. And we have current customers that want to use that, and we'll be able to also market to new customers. Total addressable market, I mean, you could do some calculation of the GDP of Europe compared to the UK and come up with some sums, but in reality, there's some countries that are much harder to crack than others. Germany may not be as easy as, we'll start with Belgium, France, and that sort of immediate area. Ireland also is obvious. I mean, it's clearly a multiple of the UK. But I'd hesitate to say what multiple it is. It's not as low as 2, and it's not as high as 20. So it's somewhere in between, isn't it? And the proof of the pudding will be, the numbers that we post in 24 and 25, I think. But where we are, I'm very, very happy with. I have to thank the MBB for how straightforward they've been to deal with. They've been clear about what they need and what we have to do, and we're following their guidance, and we are investing in country and hiring people, as Richard mentioned. So as we sit here now, I couldn't be happier with the progress we're making.
Yeah, well, I'm looking forward to seeing how that grows next year and 2025. Now, Richard, the other thing which your team seems to be excelling on is generating cash. And I did notice just sort of like your free cash flow is well over 5 million in the first half, so it's stacking up. What's the sort of the investment plans, and can you also talk through the introduced dividend policy as well?
Yeah, sure. So we are now broadly at a level where the amortization of goodwill is about what we capitalize. We'll have seen from the first half interim results that there's sort of the soft numbers in the P&L, about 3.7 million. We expect that number to go up. That's the depreciation and amortization, and obviously there'll be some amortization of stuff in relation to the intangibles that we've acquired through the various businesses. But you've already alluded to the fact that you can see how much cash we're generating. Cash seldom lies, and we've tried to lay that out very clearly. And as a consequence of that, and as a sort of desire to try and reach out to a wider group of potential shareholders and investors, we felt this was the right time, to launch a dividend policy. And it's subject to some court procedure. It's subject to shareholder consent, but we're very, very confident that will be achieved. It's very well advanced. As you will have seen this morning, we issued a circular to go to shareholders. It'll be on our website as well, which is a pretty standard formula for the circular. Redeeming our share premium and giving us tremendous flexibility to introduce dividends, do a share buyback, all sorts of things. And that's what we wanted to do as a board, is create that flexibility, position it so there's a wider shareholder group that would be interested in our stock.
Yeah, I can't see many shareholders voted against you giving them some money, so I think that's probably got to be a bit of a slam dunk.
I think, Paul, it also shows, or hopefully demonstrates to the investor community that we've gone through that sort of operational gearing. We started to grow EBITDA rapidly, then we came into proper accounting, profit, cash generation, as you've seen. This is like the last piece. This shows that we're not mature, because we're still a sort of young growth company, but we're grown up enough that we can confidently pay a dividend in the knowledge that we can carry on paying a dividend because of the way the business is performing, and the cash that we're throwing off. So I think it's an important, we crossed a Rubicon there,
Yeah. Well, I mean, I was just I was just doing the basic numbers, and your almost run rate is £1 million of cash a month on average. So of a free cash flow. So it gives you plenty of firepower. Is it, Richard, just in terms of going forward, any other additional organic investments, maybe in Rocket or in Une, sorry, not Une, in Equals Europe?
Well, we've certainly got some working capital support for particularly, Equals Money Europe. We know that that's all embedded in our internal forecasts that obviously we can't share. But that's why we remain highly confident about introducing a dividend and the confidence that that says to the marketplace. And to use another analogy, it's not just crossing the Rubicon, but in the immortal words of Barry Manilow, we've made it through the rain, and gone through a big pain barrier over the last 4 years.
Thought for a minute it was going to be Copacabana.
His name was Rico. Yeah.
Yeah, exactly.
So it is a statement of intent, a statement of confidence, and we have very assiduously tried to build up a financial picture for investors that they can see how transparent it is. They can follow the cash, and we put our money where our mouth is, and that still gives us plenty of bandwidth for low-level acquisitions that we might come across. And I know Ian sees probably one or two a week that ring him up, and lots of inbound. So, but we'll only do things that are accretive.
And, you mentioned Rocket there.
Yeah, I know. I was going to say, can you just talk through the integration with FairFX and what that means for the broader Equals sort of like tech stack and how you're going to utilize it with your clients?
Yes. I mean, Rocket, the people that we acquired as part of buying that company have now basically been absorbed into the Equals sort of group. So we still have the legal entity, but really the people are all sort of part of the main body of Equals. So it's not like we have to deploy a load of capital or any drain on resources for that entity. The Rocket integration, so if you want to load your FairFX card now, you can select pay instant bank transfer or something like that. I forget the exact wording. I've used it many times. It works amazingly. Press the button, asks you who you bank with, takes you straight into the banking app. Authorize it, the money goes. It's so clever. I'm super impressed with it. And we're now starting to roll that out. We're speaking to customers that might want to use it. So we're going to start to resell that. The other key thing we wanted to do, and a performance milestone for the Rocket business, was the app only works in sterling. So we wanted it to work in euros as well, particularly with Equals Money Europe, so that we have the full suite over there as well. It's basically working, but these things tend to be buggy, and you can't deploy them until they're completely and utterly clean to use. So that's in process now. So before too long, I think we'll have that piece as well. And then the two deferred payments will end up being made. One is being announced anyway in terms of paying out in cash rather than shares, because it suits us better because we have excess cash.
Good. Okay, then just sort of wrapping it up there, Ian. This is really sort of big picture. Obviously, the analyst will be upgrading.
You're not going to ask me for forecasts, are you?
No, I'm not going to ask. I want to just big picture, just ultimately, sort of 5 years' time. We're going to be doing it next year in the UK, 100 million plus probably, of turnover. What's your sort of ambition? I mean, we've been talking for 3 years, and you've stepped up well over the bar. You've jumped over the bar on every single occasion we've chatted. And it's sort of like, what's the sort of the ambition of the business? What would you like to do in terms of the scalability and size and shape of it?
Well, we have a clear line of sight to doing 50 million of EBITDA, that sort of,
okay.
So 200 million of revenue, 50 million of EBITDA type.
Over the next numbers. 5 years. Yeah.
Maybe not that long.
Okay, well, yeah, right. I'll put the target out.
Well, that
you beat me again.
That would take you to 2028, and I'd like to get there quicker than that. So we're confident. Clearly, we're starting to see. We came out with the own name multi-currency IBAN a couple of years ago now, and there are some Me Too type products, not quite as good. We have a first mover advantage. For sure, we could flatter profits by underinvesting in tech and various other things and have some decent numbers for a couple of years, but sooner or later it'll catch up with you. So we want to stay ahead. So we will continue to invest. We're not going to invest more and more and more, but that's why we're quite happy with the level of investment and capitalization that we have now. This steady state is the right place to be, we feel, for the sustained growth of the business. And now I look out and see what we can do with API integrations, the white label opportunities that we have, and we're moving more towards selling our wares via third parties through their brands rather than our own necessarily, become more of a software as a service type business, more fee-based, more annuity-based. I think that's the direction of travel. So yeah, I'm highly, as I mentioned earlier, enthusiastic coming into work, but also when I look forwards, I'm very positive.
Yeah, I think the whole business is very positive as well. Now, I would highlight to investors those are aspirational targets, and to get the full numbers, have a look at the broker notes, and I'm pretty sure later Canaccord will put a figure out, and I think Zeus may be the other analyst as well. So they're the ones, the official numbers.
Definitely aspirational, and definitely
exactly aspirational. And so anyway, thanks very much, guys. Another terrific set of results, and really looking forward to touching base for the full year trading update, probably in January, I guess.
Yes, indeed.
Thanks, guys.
Cheers.
Thank you, Paul.